What's up YouTube, it's Louis here. I hope you're all well. Unfortunately, we didn't hold that swing high, so we're coming into the swing low. Makes sense because we're in this ascending triangle, so we're coming into this ascending support. And to be honest guys, you can even say this is some sort of rising wedge. I don't know if anyone's saying that at the moment, but yeah, it doesn't matter if they are anyway, and that's what I'm seeing anyway. So rising wedge over here. Your technical target would be the bottom of the wedge, unfortunately. Of course, if this is an accumulation period as well, it needs to do like the Wyckoff accumulation schematic, and the first two peaks over here are the same as the Wyckoff. You've got a high and then a higher high, followed by actually a lower low, and then coming back in like this, basically, and then potentially going one more time. You have to get the exact thing out. I can't be asked to get it up, but it was playing out a million times back in the May dip last year. Oh, it just kept on happening over and over and over again, the accumulation period. That is what takes months and months and months. So yeah, if this doesn't hold, then of course we're going to come for the low, because that is your technical target. And of course we don't want to lose it. Of course, we're ready. We have always been ready. We have targets on the chart here down at 15k, because this is your low and that is your high over there. So we do have bearish targets, but you can see we're coming into this golden pocket right now. Yes, very unfortunate that we didn't hold the level we wanted. We'll go into that now. I just want to apologize because the video keeps cutting out. That was like the fourth time. I just keep pressing record 10 seconds after, just deletes itself. So we have some resistance. We broke out. We need to retest it as support. We did. We had this bounce, got trapped by the EMAs and pushed through it. Okay, that is completely fine. I'm seeing people on Twitter already trolling me. That doesn't matter. You see, we have this ascending support here. It doesn't even matter if we lose that. This is why I don't like trend lines at the same time. It's all about this low. For me personally, if you're not losing this, then I'm going to be bullish. The moment you're losing that, I'll flip bearish. But right now, there's no signs of bears. You can see, even though I don't like using trend lines, you can still see this trend line is being respected. Again, I do not like using trend lines. I mainly only use trend lines in patterns, specific patterns, like obviously this one here. And this big one over here is exactly that. So it's just a larger ascending triangle, the same as this one. And you can see, yeah, we're basically just coming to the support. Yeah, this is like a precursor. If you're losing this, it's a precursor. You're going to lose this. But yeah, we could equally just lose it, come back above, and do something like that. We do have bearish targets prepared, of course, over here, just in case we do lose that low. But yeah, of course, I'm seeing that everyone's getting a bit excited, or the bears are getting a bit excited down here, because it's just been pushing down, down, down without any relief rally. So it's going to have to bounce soon. And then we're going to see, is that bounce going to then push us under and through it? This is what we need to see next. So I drew this support yesterday. I deleted that gold box here and I drew this one. Simply, if I just get rid of this green box, the reason why I drew this purple line is if I go to the daily time frame, you can actually see, oh no, it was the 4 hour. You can see on the 4 hour time frame, we have this M pattern here. One top, neckline, second top, break, validating the pattern. If we were very bearish, then obviously we should meet the pattern's target, no? Because if we're in a bear market, in a downtrend, and we're seeing bearish patterns in a downtrend, then we should meet the technical target. Because when we're in a bear market and we're seeing these bullish targets, the bullish target's not being met because we're in the opposite trend. So now that we are, of course, we're in a downtrend, we know this, and we have a bearish pattern, so it should really meet the target. Then why didn't it meet the target then? Why did it not? And this is the conservative technical target. I'm doing the body to the body. Technically, because we're in a downtrend and bearish patterns are almost 100% more going to play out, then technically I could even do it to the wick, because obviously in a bull market, usually when I see double bottoms, I'm doing it from the wick to the neckline. But when we're in a bear market, because things are manipulated, it's safer to do it from body to body. But in this case, obviously, that we're in a bear market, we're bearish, we should be meeting these bearish targets. So why have we not met this bearish target? Because maybe there's something shifting. Maybe we're bullish. What could give me the signs of this? A higher low. That right there was a higher low. Then you formed a double bottom on the same neckline. You can see that it's exact same neckline, and you broke out, you back tested its support, and we started to head up to this larger double bottoms neckline where we got rejected, and that makes sense. We don't like breaking resistances on the first attempt. It was good that I actually faked out. So it's coming back for support. It makes sense. Okay, if we hit resistance, we need to come back to the support. If we hit resistance, we need to come back to the support. And then we also have this area over here. So from this neckline that I drew, I brought it back down and I made this green box to the previous all-time high, 19.666k. So again, you can fall through this. This is just a key support. Technically, you don't really want to lose it. You can see every time you do go below, you end up reclaiming this. So if we do go below, of course, we'd anticipate a reclaim of it or a retest of it as resistance to continue lower. Those are the two possibilities. But I'm going to get rid of this now because we don't need it. This is the support. And yeah, just to show you that even if we did meet this technical target, you can see it wouldn't have even closed below the body, let alone the wick, not even the body. So still, even if you met the technical target, the lowest point would have still been a higher low. So there's something going on, there's something changing. And of course, you did put in that higher high. So technically speaking, if this was your high and this is your low, you don't really want to go lower than this. If you're going lower than this, you're definitely coming back down to this with bigger chances of coming back down to these 1618 targets. Of course, you can play with our hearts over here. If we do come down and have a little spike under, come back in, that's going to play with our hearts and everything. So again, it's probably going to happen because this is how the market works. And yeah, it could be that this is like one bottom and we could be coming down. Of course, we wanted it to do this and then come down, but could it be that it's, yeah, this is your like one bottom, this is your neckline here, coming back down again, and then double bottoming. This is just all guesswork right now, guys. But the main point of today's video and all the videos is, of course, it's all about this low. And well, yeah, all about this low, but this is like a precursor. If you're losing this, you're going to come to this and then it's going to decide. So it's all about this low. As long as we're above it, I'm not going to flip bearish, okay? If we're closing below this and we're starting to head to the 1.272 and lower, then of course I'm going to flip bearish. But right now we still have this higher high and higher low structure. You're going to lose that higher low structure. If you're closing below this, you're going to actually put a lower low. If you're looking in terms of from just here, and if you come down lower than that, that's a lower low. So probably followed by a lower high and then another lower low, something like this. So we're just always prepared for both scenarios because, of course, everyone should put their hands up and say they don't know what's going on. I don't know what's going on. You don't know what's going on. So there's no point of trying to act smart here. You know what I mean? There's no point of trying to predict what's going on. We're just showing you data, and the data is showing that from this low, you've got a low, you've got a high, you've got a higher low, you've got a higher high, and technically this is still a higher low. So there's nothing bearish according to the data, and that's what I'm going to be driven by. And so if the data is then if then what I'm saying is invalidated, then I'm going to change my opinion like I've always been doing. Like with this double bottom way up here, we were saying over here we're going to head back up to the highs. Down here we took a trade from, I don't know where exactly, it was either from here or, yeah, I think it was somewhere in and around here. We took a trade back up to the high and we closed it at the high. As we said, as once we broke out, everyone was saying, Louis, let's long, we're going to 51k, then up to the all-time high. And I was like, no, let's not buy it. I think this is gonna get this is overextended without significant pullbacks, because I explained already in previous videos how this is not a significant pullback. You see this massive pump, then this massive pullback, and you start pumping, and those are not pullbacks, my friend. That's the pump, that is the massive pullback. So we broke the resistance. I was saying, no, the sentiment is changing too much. We were neutral on the fear and greed. Everyone was just getting too excited. And so I said, yeah, no. Even though I was calling to come up to here, once we were up here, when new data had been shown, I changed my stance when new data had been shown, because I told you guys, we're going to come back for support. And then as we started climbing up here, I told you that there was a resistance right there and there was a support right here, and we just prepared, basically put it from the low to the high, and we had our targets ready. That's why I told you guys, if we lose this, we're going to come back to this support. And if we lose this support, because there was more occasions where you came into this than this down here, if you lose this level over here, you're going to lose this wick and you're going to head to 25k, 25.8k to be exact, and we went down to 25.4k. And this could have been the bottom because there was a 200 weekly EMA sitting around here. And that's what caused this bounce, but it didn't hold. And of course, once we started heading lower, once we started losing this low, I told you guys we're going to come in and around 19 to 18 to 17k. We also have this tech target here. So all of our targets and fib targets and patterns targets have been met. We're just trying to accumulate, and this can take, again, as I've said, 6 months once the bottom is in. And it doesn't mean that so once we say, oh, the bottom is in, we're talking about the initial spike. Of course, in the future, you could have a little wick down. That would be a new lower low, but the bottom was already in. You're just fucking around with our emotions, and you could do it again. But yeah, that would be the bottom 6 months from that point. Not from if we go down again and have these sorts of fake outs like that, basically. We're talking about, yeah, the initial drop, and then we're waiting for those crosses on the weekly and on the monthly time frame, with the 12 and the 20 being on the monthly. 12 and 20 on the monthly almost crossing over, and on the weekly we're waiting for this 55 and the 69. Let's see if they're actually touching. So close now, so close. So as long as we're holding this low over here and this crossover, once that actually does cross over, or at least touches, then I'm pretty certain we're not going to lose this low, because history proves this. And that's everything that I explain on this channel. It's all proven by data. But yeah, of course, in this example over here, we lost that swing high. That's fine, because in the same video I said if you lose the swing high, you come to the swing low, and you still haven't even come into it. So that's why we're waiting for this reaction from this ascending trend line. But remember, I do not like trend lines too much, because you could see you're allowed to come back to this low, and that's already losing the trend line. So that's exactly why I don't like trend lines. Thank you guys so much. Please like, subscribe and comment. And if you're interested in the education, and I don't have many spaces left for the mentorship, I had 4 people message me yesterday for the mentorship, and 2 actually going ahead with it. So I've got 1 more space for the month of July. If anyone wants to join in this month still, I've got 1 more space for the mentorship. Otherwise, I have unlimited courses, because they're all pre-recorded. If you want the course to do it in your own time, if you feel like you don't have the time right now, go ahead and do the course. Start now while we're still bearish and not in a bull market where you've missed all the gains already. Thank you. I'll catch you in the next one, and as always, peace.